S&P 500 is probably going to retest the support level from above. We will look at put-call ratio, which is again at overbought levels and is calling for a possible rally. Percent of stocks above the 200-day moving average is a market breadth indicator, which is currently almost oversold, and in the past oversold levels readings have led to a rally in stocks. And dollar is very close to resistance. We'll also look at euro, and let's see if gold will take advantage of this. And we'll finish up with crude oil analysis as it continues its push higher. As always throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, for which you can sign up by going to my site, MasterChartsTrading.com. Alright, let's get started. Let's look first at S&P 500. Not really much has happened this week. Right now I'm gonna show a weekly chart of S&P 500. Last week was a very nice, good green candlestick. I'm hovering over it right now. This week was a little bit on the weak side, but it wasn't like that terrible. We did not break below previous week's lows, so notice there's the low from the last week. By the way, also last week we broke above this green support resistance line. These are the indicators I'm referring to that you can find out more about. So this green line is part of this indicator pack. And notice that we kind of stayed above that level. Remember, this is a weekly chart, so each candlestick is a week's worth of activity. You can see that we stayed above that level this week as well. So there is that candlestick. We almost touched the green line again this week. I think next week we'll most likely at least touch that level. Ideally, what should happen is we will form like this type of candle. I'm gonna just for a second turn off the indicator so you can kind of see what I'm referring to. This is an ideal situation where I'm hovering right now. It's the same candle as from Friday the 25th of August. It's a hammer candlestick because it looks literally like a hammer. It has a long handle and it has a big, smallish green body. So I'm hoping that we will form something of that nature. We will come down towards the green line. We will touch it, just like we'll see this hammer candlestick that occurred on Friday the 25th of August. We will touch that green line and rally above it, and then we will not stop. We will continue going higher, and hopefully we'll even break above at least this high from the 1st of September, but ideally the 27th of July high. So this is a rosy scenario, right? What's the much worse outcome? So a medium outcome, nothing happens, and we just kind of trade sideways. Maybe we touch the green line, we slightly go below, slightly go above, and nothing happens. We just kind of trade around it. The worst case scenario is we continue lower, we break below it, and we continue down, something of that nature, towards the blue line. Okay. So the blue support resistance line is currently at 41.88. This green line, the blue line right there is 41.88. It's I call it strong support, very strong support. It's about 6% down from today's levels. It's 41.88. Current prices is around 44.57. I think that if we get to that level, S&P 500 and stocks in general will become very attractive. Me personally, I'd be very interested in buying them. I would be interested in buying them both in the trading account, brokerage account, as well as into retirement accounts. Right now, it's kind of like medium. I'm not that interested, but I'm not that not interested. I'm sort of just ambivalent. Ideally, we should see a deeper correction, and as I'm about to show, there's actually quite a good chance of that deeper correction unfolding in the very near term. But once that deeper correction does occur, we will most likely see a rally start. A rally can also start right now because more or less we're already oversold. We're just not deeply oversold. So let's look at some of the indicators that I also occasionally look at. And here's one. This is where I'm hovering. CBOE, Chicago Board of Options Exchange. Total put to call ratio. So it's options put to call ratio. So we're going to puts on top, calls on the bottom. Puts means we're going to be betting down. It's a bearish bet. We're betting that the S&P 500 will go down, or stocks will go down. Call means we're going to be betting that the stocks will go up. So this indicator will total up all of those and divide puts by calls, and we'll come up with a number. Now, furthermore, I made this. Okay, if you look, this is a StockShares.com interface. So I'm going to briefly show you what I did here with the numbers. I massaged the data. I made this invisible, so you cannot really see the actual numbers, but I'm gonna show it to you what it looks like if I put in the actual numbers. Where is it? Yeah, it kind of looks like that. It's just a bunch of dots. So each dot is is 1 day. Okay, and to make things more obvious, I want to make it so that we don't even worry about those numbers, dots. We just make it invisible. We can't see them at all. So instead, what I did is I put an exponential moving average, 10-day exponential moving average. So this blue line is a 10-day exponential moving average of the put to call ratio. Right, still with me? Okay. Additionally, I put in what's called a Keltner channel. So this smooth red line and smooth green line is what's called a Keltner channel. So Keltner channel, and I did it a very long. You can see it's 250, 250. So 250 is the length, how many days it's over how many days it's averaged, and in other words, I took 250 as a because it's a 1 year worth of activity. So it's sort of like a reference. I want to know if the put-call ratio is above the yearly average or below the yearly average. Okay, and how far above the yearly average is it? Is it far above it or far below it? Okay. Now, if we look at this graph, we can see that whenever the put-to-call ratio comes far away above the general average, we get a rally in stocks. So down below here is S&P 500. So for example, there was a relatively deep correction, or rather a relatively deep correction here. This is S&P 500 in June of 2022. Notice that there was a lot of puts. So what does that mean? That means that people were thinking that the S&P 500 will completely collapse. I don't know, nuclear war will break out and there will be nothing left. So puts, everybody is scared. And usually what happens is the opposite. So when we have more puts, expect a rally. Okay, the opposite is also true. When we have a lot of calls, people are thinking we're going to go through to the moon, we can expect a correction. So for example, there's a perfect example here in July of this year, 2023. We were rallying since March of 2023, non-stop pretty much into early August. There were barely any puts. Everybody thinking that we're gonna go through the roof, we're gonna go to the moon. This ratio becomes oversold in favor of calls. Notice here in June, July, August, especially in very early August here, or late July, it was extremely so many calls, too many bulls, right? Too many bulls. And then we got a correction. So we're getting this correction that started in August. There it is. This is the top that started in late July, and we've basically been getting this correction. We've kind of been bouncing around, and now we're still not really resolved one way or the other. So notice that what happened, we are again at very extreme or quite extreme level of more puts. Okay, people are thinking that we're gonna collapse and we're gonna go to zero. It's not a terribly extreme reading. Like, for example, this reading from the late 2022 was quite extreme. Notice that today's reading is not that extreme. Nevertheless, it is into overbought territory in favor of puts. Again, more puts, we can expect a rally for stocks. So perhaps we're done with this corrective action, and perhaps we will see a rally. At the very least, this is what I'm reading from the put to call ratio. Are you reading the same thing? Are you thinking the same thing? Make a comment. Let me know what you think. Another market breadth indicator that I occasionally look at, I don't look at them every day, or nor do I look at them to time the market, but it is nice to know that you can kind of at least gauge if the market is overextended one way or the other. So what is this? This is a on StockCharts.com, the symbol is that you can kind of see $SPX A200R, like river. It is S&P 500 % of stocks above 200-day moving average. Okay, so we can put a 200-day moving average. This is a 200-day moving average. I don't know, Amazon. There it is. It's 200-day moving average. Is this stock above the 200-day moving average? Yes. You can see that it came up above the 200-day moving average here on 27th of April, dropped below it, and then again came up on the May of 2000 of this year, in May of this year. Okay, so this is a total of that. So within the S&P 500, there's 500 stocks. How many stocks are above the 200-day moving average? And we can look at this from a point of view, is this overextended up, overextended down? Are we in a bull market or are we in a bear market? So first of all, how do we know we're in a bull or bear market? Are we in an uptrend or a downtrend? So for that, I use my indicators. For S&P 500, I like to use the ETF SPY, and see on the right here where it says ADJ, that means it's adjusted for dividends. So notice here on the February 2nd of this year, the stock, this S&P 500 ETF SPY, closed above the blue support resistance line on the 2nd of February. Okay, to me this means a new bull market. Okay, and it will remain in the bull market until we close below the yellow line. Okay, if I unadjusted for dividends, we did not close on the February 2nd. We actually closed on the 13th of April. Okay, so let's go ahead and say that we are going to be using the dividends, adjusted for dividends. So somewhere in early February, we have broken into new uptrend, new bull market for stocks. So this is where I marked it. So from here on, okay, from here on, we're going to say that we're in an uptrend, and we're going to look for oversold conditions. Okay, so there are more than one way to look for oversold conditions. For example, you can use my indicators, but I usually like to see a deep correction towards the blue line, so it won't show up as often. Okay, if you want to, you can use this indicator, which is 200-day percentage of stocks above the 200-day moving average within the index. So it did occur right there where I'm hovering in the early or mid-March of this year. when this average dropped below like 13th, 14th of March, when this average dropped below, now I kind of chose this area around 42 to 43%, sort of based on like I want to be not, I don't want to call, you know, every single oversold condition like percentage. If it's below 50, then it's definitely oversold. It's somewhat oversold, but if we go like below 40, we're pretty oversold. Yeah, okay. So only 40% of stocks within the S&P 500 were above the 200-day moving average. Notice that we got a rally when we were in the bull markets. Okay, so right now we're kind of approaching a 50% line, and even 50% is pretty good. Okay, so around 50% is where I begin to get interested. I would be interested in seeing if, you know, stocks bottom here and continue the rally. The opposite is true in a bear market. When we're in a downtrend, so down below here is S&P 500. Bull market started only in February of this year, 2023. So before that, from about for most of 2022, okay, we were in a downtrend. Notice this downward facing arrows. So down, what do you call it? Bear market began where I'm hovering on April 29th, 2022, right here when it closed, when the price closed below the yellow line. Okay, that's all I need to know. We need to look for the opposite, overbought conditions. Okay, so excuse me, a great overbought condition occurred right there in August 16th of 2022. We can look at my chart, the same thing. There it is, August 2022, overbought above the red line. So we need to look for opportunities to sell it short. Definitely was a successful trade if you took it. So what I'm trying to say is that right now, according to certain indications, we're already somewhat oversold. We're about 50% of stocks are above the 200-day moving average. Additionally, the put to call ratio is in favor of puts, and usually we get a rally when that happens, when we have significantly in favor of puts. So put all those together, I think maybe we will, like I already said, my most rosy scenario, my most positive scenario is that we touch the green line and just rally off of it. Less rosy scenario is we continue to correct towards the blue line, which is around 6% down, and then from there on we rally. But overall, the bull market is intact, and you know, it will continue to be intact until we get below this yellow line, which is really quite a ways off. Bear market is below 3,678, so that's another 17% down. We're really so far away from it, so we need to concentrate on buying at this point, I think. Okay, let's switch gears. We're looking at dollar currency index, DXY. So dollar currency index is composed of so like 50% euro, there is British pound, there is Canadian dollar, Swiss franc, Japanese yen, and the Nordic currencies, and I don't remember if the Australian dollar and New Zealand dollar is in it. Important thing is the dollar is currently in a downtrend. It began its downtrend right there on the January 12th of this year, where I'm hovering, and these are opportunities to sell it short. For example, right there around March of this year, we made a 52-week low in July of this year and went on a huge rally. So we can actually look at it from a weekly perspective and notice this enormous rally. This is 1, 2, 3, 4, 5, 6, 7, 8 weeks, just straight higher. Okay, no non-stop. All right. So 8 weeks of appreciation. It's not unheard of, but it is unusual. And at this point, several things are happening. Number one, notice this green, the red line. We're very close to it. This is a weekly chart, but we can look at daily chart. We're basically there. At the red line, I would consider it to be a strong resistance. We were rallying non-stop. So I think at this point we can, definitely we're overextended in the opposite direction of the prevailing trend. The prevailing trend is down. We're overextended up. Okay. Why do I care about dollar? Is because we trade gold. So looking at gold, XAU divided by USD, dollar has been rallying. Okay, so this lower part of this equation has been getting heavier. It's been pulling this currency pair lower. Okay. Now, this level 1900 is kind of like the line in the sand. It's very important for gold to continue holding here. Once again, here's my rosy scenario for next few days, is that dollar attempts to break above the red line, maybe even closes above it, and then does something what we had here back in March. It just kind of goes above it and then comes down below it. Okay. Now notice that what's happening, I'm projecting the indicators into the future now, and this is not exactly what the bulls, gold bulls, want to hear, because notice how the indicators are getting closer together, and usually during those time periods is we see sometimes changes in the trend. So it will be easier for the security dollar currency index to continue higher and close above this blue support resistance line, which would imply a new uptrend for the dollar. And notice how close they're coming down into October, November. So this is something to worry. I mean, it does look worrisome as a projection. However, this is just a projection that hasn't actually happened. So going back to my rosy scenario, we're going to top out here around the dollar, around the red line, which is 105. By extension, gold might likely touch this blue line, bottom here, and rally. Okay, so we already found support there twice, right there, on 29th of June and again on 22nd of August. Before that, we were also buying it and close above the blue support resistance line. So I'm wondering if we're going to get something along the same lines, because the way dollar is overextended. If we look at euro, here's euro versus US dollar. Notice that the shape of this curve is quite similar to dollar currency index. It's been coming down in favor of US dollar again. Okay. So very important level is 1.062. I'm reading it right off the chart. This blue support resistance line. If we hold there, then good news for gold. If we don't hold there, and again I'm projecting now into the future, notice how the indicators are curving up and they're coming closer together. So this is not a good sign, because the trend change will occur if euro versus US dollar closes below this red line. And notice how we're kind of, coming down towards it. The price is coming down towards that level. So we will see what happens in the near term. There are some interesting things that are happening, and we will watch if dollar and gold will sort of, or rather, if gold will prove resilient and rally from here. Now there is no way to predict for sure, but notice again here I'm projecting the gold into the future, and notice how the red indicator line is coming up. So again, this is not a great sign for gold bulls, meaning that we could continue lower and break below this red line, and it's not that far off. Like here is October, projection in October. Yeah, it could be in danger. So maybe what we're looking at is a effect of raising of the interest rates and inflation coming into normal. We will see what happens. If you have an opinion, please make a comment below. Right now we're looking at oil, CL1 exclamation point. So as I said back last week on Thursday the 31st of August, beginning a new uptrend for oil began where I'm hovering with a close above this blue support resistance line. Right now we're moving higher again. So notice this weekly chart, there's the breakout, and this week you can see that we moved higher again. So how high will oil go? I think very possible towards $100 mark. We're right now around 87. I think if we get up to we could easily get up to like 108 or so. So the reason why I'm saying is it's this pattern. I'm gonna draw it in. So sort of we have like a flat consolidation, a impulse move higher, and a new breakout. So usually kind of like this move, or where I'm hovering, the length of this move or the height of this move will be duplicated on the upside. So something like that, and that we're looking at like 104, 108 for gold. So yeah, it's not a great situation because it will weigh on consumers, of course. Additionally, high oil prices will also weigh on economy in general. So not a great prediction, but we'll just deal with it when or if we get to that level. Again, what do you guys think? Let me know. Make a comment. If you have any questions or perhaps suggestions, or if you want to analyze a particular stock, make a comment. Share this video, like this video, and then head over to MasterChartsTrading.com. Click on sign up for one of the products. So I have 2 products in one package. Trading indicators are these lines in the chart, very helpful to trade pretty much anything. Newsletter, I send out daily alerts about various securities that we trade. For example, this week we traded all of the securities, various ETFs, bond ETFs, emerging market and foreign ETFs, large cap stocks, gold related stocks, and quite a bit of various speculative stocks as well. Alright, that's it for this week's recap. Thank you for watching until the end, and again, don't forget to make the comment, hit the like button, and share this video. Thank you for watching, and have another great trading week. Bye bye.